Farm for Profit Podcast. Take a listen, have a blast. Farm for Profit Podcast. Learn about farming while having a laugh. Farm for Profit Podcast.
So we get a question asked to us on a frequent basis about how does a young farmer get started in agriculture? And we're going to take one step to helping provide a solution for that. You know, obviously there's no one size fits all answer. There's no magic bullet when we talk about this topic, but one of the things that we all know is you're going to need funding. When you get into agriculture, it's capital intensive, and it's sometimes hard to think that you can actually start, whether you're first generation or you're eighth generation. There's still a little bit of a barrier to entry. So I'm pleased here to have the Mo Ag Banker from TikTok sitting across from me. It is Caitlin Niemeyer Burks, and she's going to help me facilitate a conversation around beginning farmer financing and government loan programs that can help extend the capital that we have to maybe get some possible dreams made true scenarios and get some financial packages put together. Caitlin, welcome to the podcast.
Thank you. I'm really glad to be here.
Yeah, I'm super stoked. I love the content that you put out on TikTok. So for everybody, that is Mo Ag Banker. Stands for Missouri, correct?
Right.
So whereabouts in Missouri are you from?
So I'm from Bowling Green, Missouri, just right along the Mississippi River, about northeast, probably an hour north of St. Louis.
Okay. And have you always lived in that area?
Yep. I married my husband in November, and we've kind of moved a little bit here and there, but our roots still go back to Bowling Green. So.
That's cool. So you got a lot of different agriculture in your area, at least your area of business, that we're not only talking to row crop listeners, we also can talk to those that are cow-calf herds, those that are maybe finishing out beef. You've got experience across the border, correct?
Right.
All right. So as you looked at getting into banking, is that something that you always wanted to do?
Actually, no. I've always said I don't think anybody goes into college saying I want to be a banker when I grow up. I feel like this is a profession that everybody just kind of falls into. Me and my dad were actually talking a lot, and they've always banked with Farm Credit, and I would think I was a senior in college, and I said, Dad, I don't know, I want to do something with the farm, but I don't think, I want to come back and work every day. I want to go do something that is going to help people and it's going to matter, when you're long gone. He said, well, just be a banker then. He said, because how many times have I gone to my banker and I needed help getting out of something or into something? And he said, if it wasn't for his first banker, he said, we wouldn't be where we're at today because nobody took that chance on us. And he said, if you want to do something good with your life, do that, and still being involved very heavily in agriculture.
Yeah, that's a lot of the similar lines of the way I got in. Now, I did go to college because I wanted to be a banker.
Right.
But that was after an internship. Say that again?
You contradicted the entire thought process I've had my entire life.
I know. But I'm a little bit of an anomaly. So I did, however, get to build that relationship with my parents as banker. And then through an internship that I had with them at my dad's bank with his lender, was kind of like, oh, I can help not only our farm, but I can help a lot of different farms. So yes, I did go to school for banking. So I might be one of the rarities in that instance, but I don't disagree with your philosophy a lot because there's a lot of bankers that are, I call them rebranded, whether they were the manager of the co-op or
right.
they're part of an agricultural operation or they were in sales, maybe they were in real estate. There are a lot of us that are rebranded.
Right. Oh, yeah. No, I could see that. And that's kind of how I got started as well. As I interned with Farm Credit, actually. And that's when I learned it's not as hard as I was making it out to be. Banking back then it's just a big job for big people, and it's pretty easy.
Yeah. Don't give it away. Then everybody's going to want to become a banker if it's as
Yeah.
easy as you say.
Yep. Nope. Ag lending is not for the faint of heart. That's very true. So.
That's right. So let's talk a little bit more about the family farm that you're part of. Is this multi-generational? When did that farm start?
So I would be a fourth generation farmer. Me and my little brother, we are planning to go back whenever that time comes. We're currently in that semi-transitional phase, and if anybody's ever gone through that, that's a struggle, kind of getting over those humps. we're struggling with that a little bit, just trying to figure out where everyone's going to fit in. But my dad has farmed. Our family farm started in 1993 when my dad and his cousin kind of partnered up, and they started in, I guess they started in the 80s, but everything really got established right there in 92, 93. But my grandpa, my dad's dad, farmed before him. My uncle, everybody kept going back. But my dad's dad passed when he was, I think, 10 years old. So my dad really had to
Wow.
just learn from anybody that would teach him. So just getting in there and figuring it out at 10, 11 years old, that's how everything started. So.
Right. So as you sit today, is it corn, soybeans? What do you guys have?
Yep, so we're mostly row crop. We have some cattle, and then we contract finish some pigs.
There you go. See, everybody, bankers are real people too.
Oh yeah, we
We
know
all
it
have-
all. We have to take a little bit more steps when we're in this position versus when we're outside on the farm. It's very different.
Yes, absolutely. So now there's something that you've branded your social media around, and that is an educational stance. Why are you so passionate about even saying yes to this interview today? Why does that matter?
Because I've branded myself on at least FSA Lending and showing people that getting these loans is possible, especially for young beginning farmers. And it stems back from my dad because he went through the FSA, well, it was FHA back in the day, and he said if I wouldn't have had that, I wouldn't have gotten started. So now I kind of shift my focus to my generation, me and my brother, everybody kind of under 30 years old. How are we going to get financing? Everything is so expensive nowadays, land, inputs, cash rent, pick something, and it's blown out of the water. And I figured if having a good banker stops, me and my brother from being able to purchase some ground just because they know the FSA route, they know Farmer Mac, they know USDA, whatever it is, I want to be that person for all young farmers when they need it. They may not think they need that now, but getting that good relationship with a banker, the very first point in your life when you're ready to take over, that's going to matter more than what your cash rent prices are and how well you know everything else. If you can't secure a good banker, it's just not going to work, in my opinion. So.
Well, no, I would agree. One of our listeners are familiar with my philosophy of having a banker on the bench.
Right.
And I've used it most often in the terminology of you may have a banker that you work with, but it's not out of line to have another bank's lender review your financials every year to kind of help give you a keeping track, maybe do benchmarking. But this philosophy goes for even if you don't need one currently, that banker on the bench is still somebody that you can call on someday in the future.
Right.
So relationships go so far in the world of banking.
Right. Nope. And my dad's always told me it's not what you know, it's who you know. And in the ag world, that matters so much more because there's some things I just don't know, but I've learned how to grow relationships and to make friends with my customers, and they've turned into my friends and to my family because I truly care about them, their kids, what their spouses are doing. I know, all my customers down to their animals. We know who the family dog is, and it's important to have that.
So as you wrapped up your schooling, because you've got an MBA, correct?
Right. Yep.
So in my mind, you are overqualified to be a banker. But why pursue that level of expertise going into this role?
Because I can help more people at this level. If I were to keep climbing the ladder, and that is the goal, to keep climbing that corporate ladder, but at this level I can help everybody that comes to my desk. If they make phone calls, my TikToks bring in a lot of people, not just customer base, because that's not the point of my TikTok. I'm not trying to pull customers from other banks or all these states. If they just can take what I say or my opinion or say, this is what I heard, can you do this? That's helped more people. And if you become, CEO of something, you kind of miss out on that, this little, I don't want to call it a little level, but this level of helping people and being in front of everybody.
Absolutely, the customer interaction. Because when you get into a level like that in management, your customers are the employees
Right.
rather than the customers themselves. So this is great. And like I said, you guys need to go check out Mo Ag Banker. If you're not following her already, you may learn more from her TikToks than you do from this entire episode. It's a really great resource. But now let's dive into some of the ways that lending and banks can help farmers get started in agriculture. So when somebody sits down across the desk from you, how do you approach that first conversation?
Really figuring out what they want to do, what their 10, 20-year goal is. Because we can look at the now all we want, but now with interest rates being at almost 8, 9%, we have to kind of look past that. We have to be able to set you up for the now, but also what you're going to be like in that 10, 15, 20 years. And figuring out what their operation looks like, what's going to be the best to help them make sure everything's running smoothly. Because the last thing I want to do is tie somebody down so hard that they're eating ramen with lights off every night because they can't afford any of their bills. So
I love that. And that's actually one of the misconceptions is that that's the way you have to live. If you want to go buy a piece of farm, that's the way it is. It's either that or it's the fact that we're going to take your firstborn child as collateral. And that's not right.
right, no, it's making sure you are set up to live. Because the last thing we want to do is the farm has to pay for itself over time. I mean, if every piece of ground cash flowed, everybody would be farming. We'd all be doing it because it would make sense. That's not the case anymore. But you don't want to have to dip into your own family living in order to make the farm keep going. Obviously, last resort, you got to do what you got to do, but make sure you're set up, for that success too.
So as you are looking at products that can help a beginning farmer, so we all know that a traditional bank financing is going to have parameters in place, usually set up by a loan policy. And typically, let's talk buying a piece of farm ground. Typically, when you go into a bank and you look at their loan policy, they're going to have a loan to value limit, somewheres in that range of 45 to 65%, depending upon which company you're working with.
Right.
And they're going to give you a value per acre in achievable debt that might cap you out at a lower level. So that's a standard, that's the typical way to go about doing this. But since you specialize in FSA packages, what are other options that we can look at that maybe don't require such a hefty down payment?
And utilizing the FSA in that aspect of it, they have young beginning farmer programs. One being the 50-50 loan. That's where you can get up to 50% or $600,000 of your purchase price locked in at 40 years. That matters when people, you sit down, you do your cash flows, and you're looking at your debt service coverage and all your other ratios. Having at least $600,000 or half of your loan locked in at 40 years, there's so much more wiggle room in there that you can afford to, pay a little bit more cash rent to get that next piece of ground, or buy a newer tractor so your old one, keeps going out. It gives you that room to do more things for the farm. There is no down payment required with that. Obviously, if you're not meeting the standards, you have to put a little bit down. They don't require it, but they can take liens on other grounds, your home, but that's all the FSA is doing. That is them making that call. The other 50% of your loan just comes through the bank. You partnering with that bank and with that lender to be able to do this is going to be really helpful going forward when you're talking about lines of credits or machinery loans, anything like that. You're establishing that relationship early on and then allowing your cash flow with that 40-year loan in there.
So you said locked in for 40 years. Can you explain what locked in means to the listener? Does that mean my interest rate is going to be the same every year for 40 years?
As long as your cash flow continues to show positive cash flow every year, they do audit you. I think it's like once a year after your loan, then like every 2 or 3, depending on the size of your loan, your operation, and some other different aspects of it. But your rate is fixed at 40 years. But now if your cash flow is improving and you're way up there and you don't qualify for FSA lending, they can what's called graduate you, meaning, hey, look, you look really good right now. We got to take you out of this so we can allow these funds for other struggling farmers. And I know that's not what people are going to want to hear, but it's the truth. I've never had any of my customers graduate the system yet. I've never really heard of anybody graduating the system yet. So it's there. It's an option. I just don't know how prevalent it really is.
So I haven't had a direct customer, but I've had a friend that received a request letter. and it was stating that they could extend the financing. The rate would go to a market level, or they could pay the whole note in full. And it was only like 50 or 60 grand left on the balance. So it was beyond the meat of the relationship. But that is a fact, and I'm glad that you brought that up. But the other thing I want to go back to on this 40 years is, how is that different than a typical bank financing? Do typical bank structures without involving the FSA allow loans up to 40 years?
No, unfortunately, we can really only go 30 years, and that's kind of a stretch sometimes. A lot of banks like to go 20, 25 because, face it, we get our money back faster. That's just how it is. But a lot of traditional banks cannot go more than 30 years, and it definitely cannot be fixed for 30 years unless you're going through a mortgage, and that's a whole other monster that I never want to be a part of. But you you can't go that full 30 years throughout a bank without at least it adjusting. So if you were to go into traditional financing, your rate would adjust every 3, 4, 5 years depending on what the bank's policy requirements are. So that's where it's a little bit different. You know, you put $600,000. You know, 3 years ago, rates were at 3, 4%. Things are going to start adjusting to the 7, 8%, and that's going to be a shockwave for a lot of people.
Yeah, absolutely. I've got a lot of customers that are already trying to plan ahead
Yep.
and actually almost forecasting what they can to their best of their knowledge to, do we want to refinance today to get ahead of this and take today's rates if we feel rates are going to go higher in the future? Or are we going to try and hopefully time a reconnection? Maybe we're going to see if we can get things back into proportion again and hope in the next 3 to 4 years that we'll see rates drop. So it's the whole crystal ball that nobody has. There's a lot of customers trying to consider that. But you just described a no down payment program. What, and you said there's standards. Can you give a little bit of an idea of what it would take to qualify for something like this?
The really only qualifications are is having at least 3 years of a Schedule F income, or filing a Schedule F, or having that farm management experience. So if you haven't filed a Schedule F, if you just worked for dad or grandpa or uncle for the last 10, 12 years of your life, we can use that. As long as you know how to run a farm, how things work, that experience is there. But you can't have more than 10 years of that experience or filing a Schedule F to be considered a young beginning farmer. Now you can go above that 10 years and we can utilize the FSA Guarantee Program, but you can't get, half of your loan at 40 years at 3%.
Okay, so what do you mean by that? What's the FSA Guarantee Program?
So the FSA Guarantee is just where me as a bank, FSA is not acting as a banker or as a lender in this case. So like on the 50/50 program or the down payment program, FSA acts as a bank. So they are able to give you up to $600,000 or $300,000 depending on what program you go through. They act as a bank and they give you money for that. So you have to fill out an application with FSA and then you have to fill out an application with me. The guarantee that I'm applying for as a bank really means nothing for the customer but everything for the bank. So that means I can apply for a 90 to 95% guarantee on your entire loan amount, meaning that if you were to go under tomorrow, FSA is going to back me 90 to 95%. Some banks are able to sell off their guaranteed portions for a long-term fixed rate, and some banks do that, some banks don't. Some banks just keep them on their books, but then they split that loan up again, so the remaining 5 to 10% stays on our books. It's on adjustable at 20, 25, 30 years, whatever the bank chooses. So that's where the guarantee program comes into. We do that a lot with people who don't qualify as a young beginning farmer, or it just doesn't make sense to go that route. They just want a 30-year fixed rate on 90 to 95% of it, they can go that route. But it'll only be fixed for 30 years. The rate is obviously going to be higher because it's not utilizing FSA at 40 years for 3% or 20 at 1.5. So.
Yes, so let's get into that 20 at 1.5 option because
Yep.
there's small differences between these FSA packages that make a big difference when we're
Yep.
looking at considering them. So now go into that 545-5 plan,
So
or
the
50-45-5, sorry.
Right. So the down payment program, you only bring in 5% down. So that's all you're required to bring in. And that FSA will lend up to 45% of that at 1.5% for 20 years. It is a little bit smaller amortization. You are bringing in that 5%, and it's also at 1.5%. And that's great. We've never seen 1.5%, and that interest rate has stayed the same for a long time. That they don't see that one changing hardly at all. So you do bring in that 5% down. FSA will lend that 45%, and then me as a bank, I will come in and I will give the remaining 50%. So that one is a little smaller, a little, you don't get as much, and FSA will give you up to 300,000. 300,000, I think it's 150. They will give you that much, and then you'll lock it in for 20 years at 1.5%. That one I don't see or hear really a lot of people graduating from, because that's 20 years. There's no
Right.
prepayment penalties on any of these loans, so you can pay it off if you come into a lot of money, you have really good years, or you just want to focus on paying down your debt. That's there. So that 20 years helps a lot of people out. You just you live tight for a little bit until things start cash flowing a little bit easier, and you just go on your way.
So that you just live tight for a little bit comment is typical of the industry, because agriculture, you see a lot of sacrifices.
Right.
And you see a lot of sacrifices for the ability to farm long term and to farm for more generations to come. You don't see that because you also do commercial lending, correct?
Right.
You don't see that a lot from commercial clients. There's not as much sacrifice that goes into a tow truck loan, per se.
Right. No, you don't. And my last employer, actually, I don't want that in there because I don't want to talk about them.
Yep.
My previous, I guess I was more involved in commercial lending, and a lot of rentals, a lot of doctors, just a lot of people who had more money, they didn't care. They would do whatever they could. They'd inject all the cash they had, and they were good, They would pay on their loan, and they would have all that money coming right back. But they had better businesses. I don't want to call it better businesses, but they had businesses that gave them more money all the time. Farming, you don't get that. You're not, one year you might have oodles and gobs of cash. Next year, you're just poor, That's just how it works.
Yeah, it's an industry where you don't get to control the sales price.
Right.
And some will argue against us, and that's totally fine because you can decide when to sell your corn. That's true, but very few farmers have the size to affect the market value of the crop that they're selling.
Right.
We're not talking about value-added products. We're not talking about private selection selling directly off your farm. Obviously, that's a little bit different. But in the grand scheme of things, if you were a dentist and you wanted to charge a certain price for a filling, you could do that. Insurance is going to cover so much, and the customer pays the rest of it. And if the demand is there, you can continue to raise your prices.
Right.
Farmers don't have that opportunity, so it's a struggle. But I'll get back on topic here just a little bit because, obviously I was selfish and took this interview to myself. I don't have David, I don't have Corey here to offer their perspectives, but I can just hear Corey in my ear saying, yes, but the application process just sucks. Why does it suck so bad to get a loan, let alone a loan that involves a government entity such as the FSA?
Because you're working with the government. I mean, that's the shortest answer, but they have to also, I guess, playing good guy and bad guy, they have to make sure that you are a young farmer, that we are using these funds for what it's supposed to be. The application process sucks, and it takes so much time and effort to even really get through it. But it's one of those things, just like every aspect of farming, it takes time to do that, and to put the effort into something, you're going to get reward out of. And I feel like that's farming in general. All the time, effort, and money you have to put into something just to get a little bit out of it, it's worth it in the end. They did change the application to, I think it's 13 pages. It's finally all online. It used to be all paper. You'd have to handwrite it all out. It was just like 19th century kind of application process. It's not 2023 time yet. So they've gotten there, and it's been a lot more helpful. I finally just did one the other day because I've not had anybody go through it, and it's 10 times easier now. So if you're going through the process now, it's not going to suck as much. But some of the, I guess, verifications are going to ask for all of your savings accounts, anything you really do, they're going to ask for. They want to make sure that they know who they're lending to and that they're lending to something that's going to be worth it in the end.
And that's another reason to have a lender that understands the process. Because again, speaking for Corey, and I have no problem doing that, is he was physically frustrated during the process that he went through because everything was by paper, everything had to be mailed. If
Yep.
you needed a signature, you had to be notarized. So it felt like through the process in which he went through, which was not with me, was broken up. Why didn't you ask for all of this information the first time you asked it for me so I could put it all into one big packet? So doing it online has got to help with that.
And it
Being
does.
able to have a portal to upload to rather than mail it, envelope, stamp, get it to mailbox, ship it
Right.
off to get that process put together. Because land transactions typically come with a deadline.
Right.
And if you're going to buy something at an auction, how does the FSA fit into that when a typical auction closing is 30 days?
It doesn't. It's really hard to utilize the FSA right away by, if we are going to auction, we have to get a pretty good heads up, and talking to the FSA officer and having that open line of communication between me and the FSA, the customer and the FSA, that's going to matter. While they can't, put a rush on things by any means, they do more when they know what's going on versus not, just like everybody. And in banking, I feel like we have to know everything all the time. If somebody died in your family, you should tell us, because that's going to make sense for why we're not getting hold of you. We can't talk to you. If things are going on, you can't make your payments. We need to know those things. So having that communication and utilizing FSA for auction pieces is harder, but we can still get it done. Most of the time, having that communication with the FSA officer saying, hey, we have 30 days to close this. What can we do? And they'll usually give you, we can do bridge loans. We can do something. They'll help us figure it out in the long term.
So what is a bridge loan? If my lender is saying, nope, we can't participate in this auction because we're not going to get anything closed in time, how does a bridge loan work?
So a bridge loan works as we as a bank would take it in-house for, say, 30, 60 days, however long we needed, with the FSA's approval, saying, we don't feel comfortable enough taking this loan on in-house for whatever reason, whether it's a loan-to-value issue or a debt service coverage issue, whatever it is. Us as a bank, he does not meet our quality or our, good God, I just lost all the train of thought I had. Does not meet our policy requirements for this loan. So what we can do is we can go to the FSA and say, hey, this guy doesn't meet our policy requirements. What can we do? We can do a bridge loan where we take it in-house, and then FSA works their magic and they can get us approved, and then we can take it into the FSA after that. That does not work for like a young beginning farmer loan or the 50-50 or anything like that, but it works for the Guarantee Program. Now, if we're trying to go through the young beginning farmer program, we have to have a lot of communication with the FSA to figure out what the best route is, and having that approval from them on how they want us to handle it, because it's all up to them at the end of the day if we want to get that 40-year or 20-year money.
Right. And David, the other co-host, he would sit here also and advise our listeners that you can also go talk to the auctioneer. He's not saying every single time the sellers would grant an extended close, but there are certain arrangements that can be made. Just because the auction flyer states that the closing date is expected to be May 1st, there are opportunities to where the sellers may have the opportunity to extend that if they want to work with you. I can't tell you, listeners, that that's something they will do every time, but you got to start off by at least going and asking. So
Right.
that's probably the two biggest complaints that I get on my side of things, is that the FSA is so slow and the application process is so erroneous.
Right.
But, we kind of already talked about this. The application process is getting better, but it's also necessary because, just like you said, we don't want to create a loan that's going to potentially put your farm in a really bad cash flow situation down the road. And the same thing with the FSA. It is taxpayer dollars that go into these programs, and they want to make sure that they get used for exactly the purpose they were intended to be used for.
Right.
So now, is it a myth that the loan programs can actually run out of money each year? Or is
It's not
that
a
true?
myth. It is true. They can run out of money, and that's where we are able to utilize the bridge loans more. Us as a traditional bank taking it in house, and then whenever FSA has money allocated back, we can take it back into them. So it's true the government can run out of money. They have different buckets allocated for young beginning farmers or socially disadvantaged farmers or anything like that. They have that money there every now and then, but it's been, I think the last time I had issues with it was maybe 2 years ago, right during COVID. So that was really the only time I've ever had to take more loans in house than I probably wanted to. But we were able to get them into the FSA. It was probably weeks, a couple weeks, maybe a month or so later. So
Yep. And I had forgotten about COVID. I tried to put that behind me, but um, that was an interesting time period. That certainly brought things a little bit more into perspective as far as that goes. But
right,
okay, so now let's just think about the scenario for our listeners. We've covered what products are available. We've also then kind of explained a little bit as to why the documents are needed, and the application process is going to get better. We know we could potentially get into a farm purchase, an acquisition, or a financing need with little to no money down, which is great. What do I need to bring in to see Caitlin if I'm interested in this loan? How do we start off?
bring in at least 3 years tax returns. If you don't have that, give me W-2 statements or something to show that you are making money, or if it's just your P&Ls for your farm, we can work with that. Any balance sheets, putting together a good balance sheet matters, especially to the FSA, because they can see that you are going to know how to run this from now on, because they're going to ask for those balance sheets for the rest of your life. As long as you use their programs, they're going to ask for those. Anything showing your farming experience, whether if you were in FFA, you were in 4-H, you've worked with dad or grandpa, bring in anything you can show me that you know what you're doing to get into the farming program and wanting to purchase something. That's at least a start.
Yep, that goes a long ways. And business plans is something that it seems like new business owners come in with, and I don't always see that from the farmers that come in.
Right.
I know it's a lot harder to predict, obviously, but starting with a plan gives us an idea as the lender perspective as to where you're headed, what your goals are. We understand you might not be able to control yield, you're not going to be able to control prices, but same thing as it would for someone running a plumbing company that says, you know what, I want to do all residential plumbing. That'd be the same thing with a farmer saying, well, I'm going to do all purebred Angus cattle.
Right.
Okay, well, now we don't have to worry about putting in a large, expansive cash rent scenario,
Right.
because we're going to force ourselves to grow a row crop operation. So that's great as far as that goes. So now, as you reflect back on the transactions that went the smoothest for you, did they do anything differently to make that process better? Or was it more of the way they were financially positioned?
I wouldn't say the one I'm thinking of. He was not very financially strong. He was a young beginning farmer, just getting started. His communication was top notch. That I feel like I had an email almost every single day with me and the FSA officer copied over what he was doing, where he was at on his application. If he had questions, he would always respond back to either me or the FSA officer pretty timely. We just knew everything. His loan took forever to close. I think it was probably a couple months to close. And he was always very forthcoming with information. He would never get upset, which is very hard for a lot of our farm customers to do. Because in farming, you have to move quick. You can't sit on something for a couple weeks. It has to be done like yesterday. He was always very nice and respectful, and that didn't really help him with the FSA process, but it just made everything go so much more smoothly than some of the other people I had that are financially strong. They would have everything, but they wouldn't talk to me. They wouldn't talk to the FSA officer. I couldn't get anything out of them to help the process move along. So again, the communication is such a big thing, and I feel like I'm going to say it 100 times now and 100 times later. That is one of the biggest things that you can do, whether you're financially strong or financially weak. If you can communicate, we can get through it a lot easier.
Right. And that also kind of goes down the line of maybe we don't have to involve the FSA. Some of the things that I've done conventionally within just the walls of the banks that I've worked for is sometimes we can do a CD secured loan. Maybe, we provided options if you don't have a lot of additional multi-generational support. If you don't have a lot of money to inject as far as a down payment goes, the FSA is a great opportunity there. But
Right.
sometimes there is multi-generational relationships involved, and sometimes there's wealth in those generations to where I've done CD loans, which for the listener is simply the owner of the CD fund, certificate of deposit. It's a savings type account that has a fixed maturity. They take that money, say for example it's a $500,000 CD, they invest it at the bank for 5 years and get an interest rate return. That money does not change ownership. Say it's grandpa's. Grandpa still has his CD for 5 years, and the bank will pay him his interest for 5 years. But if he allows that to be pledged as collateral for one of your loans, then that provides an extra level of security for the bank and potentially provides you a cheaper interest rate. Because ultimately, the play that the bank has is if you default on your loan, we know we have dollar for dollar in Grandpa's CD available as collateral. So there's really low risk. And typically we just charge you a margin over Grandpa's money. So that's another opportunity. I'm using Grandpa as an example, but this could be an uncle, this could be even an investor. Because I've had, I don't know if Caitlin, you've had this situation, I've actually had a couple of investors. They're not necessarily a hard money investor, but they're an investor that will provide a couple $100,000 in the form of an interest rate return and are even willing to guarantee or co-sign on the note.
Right.
No, these aren't super frequent instances, but I want to make sure our listeners know that those opportunities also exist. And then
Right.
obviously the other one that's probably the most common is if grandpa or dad or grandma or your uncle has farm ground that they already own, is pledging that as additional collateral. Maybe we are looking at a farm purchase, you've got 80 to buy, and your uncle's able to pledge an additional 80 acres as collateral. Obviously, again, same thing for the bank. You're responsible for your payments. If for some reason you can't make your payment anymore, the bank feels comfortable because there's twice as many acres listed as collateral. Are those any of those examples you've been able to help with or seen customers use successfully?
Using grandma, grandpa's, and dad's ground is something that I see a lot more with my generation because we can't really afford to start farming. So kind of piggybacking on dad, grandpa, grandma, whoever it is, and having that support there. I've done a lot of that, at least here recently. That's been one of my biggest tools. A lot of people don't want to go through FSA. They've worked with me or my bank forever. They don't want to use anybody else, even though it makes sense to do it. They don't want to. They just want to keep their money here. They want to solely work with me or any of our other lenders just because that's what dad did or grandpa did. That's just the way of farming. That's just how the mindset is in farmers.
Yeah, and I think I want to take the rest of this episode just to kind of put ourselves up on a little bit of a soapbox. And I'm going to do that just like you said, communication and the relationship side of things. I love what I do. I love my role at a community bank, but I am not naive enough to see that the world of financing is changing all around us.
Right.
We know that there are online financing opportunities. There's cooperative financing opportunities. A large percentage of operating balances have been financed by dealers.
Right.
Through either John Deere Credit, John Deere Financial. You're looking at dealer seed inventory notes. So there's a lot of things coming down the pipeline. Why do you feel there is extra value in working with a community banker?
I feel like you get that more down home, at least for my bank. I feel like you get that down home. You know your neighbors know you. You live with these people, you work with these people. I feel like it's more of a personal relationship at a bank versus, a co-op or a seed dealer or a machinery dealer. They're just there to make the loan, get the deal done, and that's it. They're not calling you to see what the yields did that day, how the weather's doing, how mom's doing. They just want to get the loan done. And that's at least all I've ever experienced with any of my co-op dealers or seed dealers or anything like that. they're just there to get the business done, and that's all it is business. If you keep coming back, they've done their job at least well enough, or interest rates are lower. But I feel like for a community bank, you have that more of a personal relationship with your banker than you would anybody else.
Yeah, and I would echo everything you've said. And the one thing that I'm going to add is we're not commission driven. So, not stating that you could be put into a financially poor position, but it's certainly something you want to consider.
Right.
If the person who is also selling you the product is approving you of the financing, do you think there's extra incentive for them to say yes to maybe something that you couldn't or shouldn't or maybe don't feel comfortable affording because it pushes a sale further down the road? But
Right.
as we sit here and record this, just the first part of April, this show's going to come out in May. We also have a little bit of uncertainty in maybe the general public, maybe not so much in Missouri and Iowa, about the quality of the banking industry.
Right.
How do we sit as far as stability goes? So, what do you say about ag banks in general? How are we doing? Are we about to fail?
I don't think so. I think banks have learned a lot from the 80s, just as farmers have learned a lot from the 80s. We're not going to see the 80s in that magnitude, at least with the financial institutions. We're not going to see that. We're not going to be calling notes like we were, because we've learned how to set people up for success rather than I'm just going to make you a loan just to get you out of my office, just so you'll be quiet and you'll be happy. I would rather tell you no and you be mad at me and cuss me out a couple times than set you up for failure to I have to call you and say, we need to come get your stuff. We got to hold an auction. We can't do this anymore. I have never done that. I never want to. That is my goal for my entire career, however long it lasts. I never want to do that to where I've set somebody up for failure. If they fail on their own, that's one thing. But knowing that, I've done my job right, just as every ag lender, I feel like that is our mindset as ag lenders, is we're going to set you up for success because we also live that life too. We farm on the side, part-time, we see dad or brother or whoever do it. You put yourselves in their shoes and how it's going to affect them later on as well.
Yeah, and I would also say that, if you think about the 80s, there was a lot of collateral-based lending done during that time period, to where there was so much reliance upon the level of inflation that, oh, we'll make the loan today, the farm will be worth 20% more in 2 years. And now we put so much more emphasis on cash flow,
Right.
and we do so much more stress testing. Like I said,
Okay.
we've learned, but then we're also, ag banks are not like Silicon Valley Bank, to where we're in high risk investments. There's usually a very conservative nature
Right.
about that. But I got to jump back, and it's poor me as a host to not also think of a question that Corey would ask. And now going back to the FSA loan programs. So bouncing back, get your brain back in the right spot.
Okay.
That's for beginning farmers, but how old can I be before I'm too old to get a loan, or how big can I be before I'm too big to get and qualify for one of these?
So they can't put an age on it because that would be considered, you know, good God, I just lost every train of thought I had. It'd be discrimination. We can't put an age on it because that would be discrimination if you were 55 and older, and we can't do can't put a younger age, anything like that. If you're 55 years old and you just got started in farming, you're gonna start doing it on your own because dad or grandpa or whoever it is you've been farming with has passed away. You qualify, and if you've just been filing 3 years of Schedule F income, you qualify. They can't put an age on it. You can't get. I can't say you can get too big because we have, a lot of larger farmers that can still utilize FSA just because they have, they've worked their cash flow enough to where they show that they're not making money because they are growing so quickly because rates or cash rent's gone up. They're having to pay more and the inputs keep going up. They can show that they still need that assistance. And after a while, they'll realize maybe you can do it. They might push you out. They won't approve you as easily, or they're just going to need more verifications for things. But FSA will continue to help as long as you show that you need that help to keep growing.
Yep, good. I love those answers. Thanks for adding that little piece of input. Did we miss anything today as we were trying to explore the world of finance?
I think one thing we might want to touch on is the socially disadvantaged farmers through FSA. So socially disadvantaged means your ethnicity, your race, and whatever your gender is. Male, or let me back up. So if you're a female and you are of Indian descent or any other race or ethnicity, it's not that you get approved faster, you just have a different bucket of funds available. So if the funds for the primary young beginning farmer um, loans or funds run out, you still have those funds there because they're not utilized as often just because we don't see as many female farmers out there or the primary operators. Obviously, they're out there and they farm with dad, mom, grandpa, whoever, but they're not the primary operators or borrowers on it. So, socially disadvantaged is a really good program to utilize through the FSA if you're a woman, if you're, I don't even want to say black, white, Mexican. I don't want to say that.
Right.
If you're any other ethnicity, gender, you can utilize that.
Yeah, and you're exactly right. It's the title is defined obviously by the government, socially disadvantaged. But what that does is it doesn't mean you can't just apply for the standard young beginning farmer loan.
Right.
It's providing that extra opportunity for you if funds run out.
Right.
Yeah. No, that was good. I'm glad that you added that in. So as I get ready to kind of summarize what we talked about today, I'll give you some time to think about the question we ask every one of our guests. And you can frame this however you'd like, but what does success look like to you? What is successful? So whether that's with you in the job, you on the farm, or in life in general, what does success look like to Caitlin? So we were here today talking to the Moag Banker on TikTok. That's where her and I got connected, and it's just a great alternative resource to go and have a fun approach to learning about what financing is like, especially for those that are beginning farmers. We talked a little bit about her heritage, where her family farm started, where they're located down there in Missouri, and what she's done to professionally train herself to be able to assist beginning farmers. So we highlighted FSA loan programs, the beginning farmer loan options that have no down payment requirement, have up to 40-year fixed rate interest loans, allows 50% of that to be covered by the FSA. The bank covers the other half. We also talked about the down payment assistance program to where you come up with 5% of a down payment. The FSA carries 50% of that, and the bank takes the other 45. We then also talked about guaranteed loans. So there are a lot of opportunities involving the FSA to provide additional structured options to getting you a potential dream farm purchased. We also had talked a little bit about how painful the application process used to be and the reasons as to why so much information is necessary to collect during that process. But there's good news, it's moved online. We've got things shortened up just a little bit, but it's still going to be very thorough. And that's why having a relationship with a community banker that understands the process is going to be extremely valuable. We talked at the end the soundness of banking, and especially those ag banks in general. Obviously, you can talk to your bank anytime that you want, look at the security and strength of their institution. But we also know that when you work with a community banker, that you might get other options. FSA is not the end-all be-all. It certainly does have its place and provides its value, but there are other strategic ways that you might be able to work with your banker that involves family or investors to help get your dream achieved. We did hit really close to the end about the socially disadvantaged pool of funds. So that is another way too, if you're looking at getting in the category of beginning farmer or young beginning farmer loan and the funds are running out, that's another pool of funds that you can dive into yourself as well. Ultimately, communication is the key. And I know listeners, we have talked about this over and over again as it relates to even working with your salesmen, working with your employees, working with your family, but ultimately too with your banker, because those are the most successful applications, are the ones to where that barrier of communication is completely removed and we're able to openly get from point A to point B. So as I summarize that, what does success look like to Caitlin?
I feel like I've already hit my success in my life. I'm working at my dream job that I'm able to educate not only the people around me, but also, the employees here, the lenders, upper management who may not have come from the ag background. But also at the same time, I'm carrying on what my parents have instilled in me to work hard and just to be a good person and to help who you can whenever you can. So I feel like I can only go up from here. I married my best friend in November. That was a huge, huge success thing for me, is to have that good person in your life that can continue to push you. Because my dad always said it matters who you hitch your wagon to, and hitching your wagon to a good person means everything in your life. So those, I think, that's my success.
I love what you said. Help whoever you can, whenever you can, will be great. And I think that's my challenge to listeners today is, obviously I want you to don't rule out options for getting your dream started.
Right.
That's what bankers are here to do. But more ultimately, I think my challenge this week is take advantage of that opportunity to help whoever you can, whenever you can. So, Caitlin, remind everybody how they find you on social media.
Through Moag Banker on TikTok.
Absolutely. Go check her out. Caitlin, we appreciate this. Thanks for helping share and carry the burden of answering these questions from one banker to another. Greatly appreciate that.
Yep, nope, I appreciate you taking the time to invite me on here. So.
Sweet. So listeners, thank you again for listening to us. And until next time, have a good one.